Welcome to lesson 3 of my Daniel FX strategy. The strategy that I strongly believe will make you profits. This is lesson 3, and on this lesson we will be discussing confirmation. Before I get into the lesson, be sure to watch this course in order, guys. Watch it in order because you can't just skip lessons and go straight to lesson 3. You need to have the information in order. I put it in order specifically because they follow each other. So this is lesson 3. We're going to talk about confirmation. Before we get started, what is confirmation? What is confirmation, guys? Before we get into the forex side of things, I like to look at the English side of things before we incorporate it into the markets. So let's do a quick Google search of what is confirmation. What is confirmation? So Google says confirmation is the action of confirming something or the state of being confirmed. So basically the action of confirming or the state of being confirmed. So now let's put that into the forex market. Confirmation is, I would say, waiting for a sign that tells you that your setup is going. Waiting for a sign that tells you that you can enter. Let me put it this way, guys. So confirmation is waiting for a sign that tells you that you can enter your setup or enter your trading setup. So confirmation is waiting for a sign that tells you that you can enter your trading setup. But you may be asking, why is confirmation important? Why is confirmation important? Guys, the reason confirmation is important is because there is a lot of market manipulation in the markets. There is a lot of market manipulation in the market. So this is very important, guys. There is a lot of market manipulation in the markets. Now, if I can give you an example of market manipulation, it is when we have our zones. If you're confused on zones, guys, make sure to watch the first lesson. This is why I said you need to watch these lessons in order. So you have your bullish trend. We talked about this in lesson 1. You have your bullish trend, and then you have your zones. So now the market doesn't move like this. When you open your MetaTrader platforms, the market does not move like this. This is how it's supposed to move. This is the playbook of how the market is supposed to move. let me show you the reality of the forex structure. That was just what you need to keep in mind when you analyze. You have your bullish trend, the market can move something like this. So now, if we're talking about manipulation, you can be in a situation whereby it's a bullish trend. So obviously we're gonna look for buys. So let's identify our zones. Zone there and a zone there. Now manipulation is this right here. This is called excuse me, this is called a stop loss hunt right here. So if you're the trader that doesn't wait for confirmation, we had a break of the zone, of this zone, and then we're expecting a retest, but no, what's going on? What is this right here? If it broke, as you can see here, it broke, and then when you don't wait for confirmation, you're gonna straight away think that it's a sell, and you're going to sell, only to get stopped out and sitting with a loss. So that is a stop loss hunt. That's why it is important to wait for confirmation. In this situation, you could have waited for the market to come to a zone, to retest, and then we know that it's going to sell. But no, because you didn't wait for confirmation, you sold immediately it broke out. Or the other side of this is true also. You bought as soon as it touched the zone, you put your stop loss right here, you got stopped out. So that's why in this situation, it is also important to wait for confirmation. Where the zone broke, came here, and then we're gonna look for something we call a double top and a double bottom. But before I get into that, let me show you the bearish side of things. So you have your bearish trend. Everything is just exactly the same. The only difference is it's the opposite. You have your bearish trend. There we go. And then you identify your zones. Identify your zones, guys. A zone there. A zone there. It's all about practice, guys. If you practice, you will get better at this. So let's say I am that trader that does not wait for confirmation, and I have identified a break, and then as soon as it came back in the zone, I put a sell order. And I put my stop loss right here. There is your stop loss hunt. Because you did not wait for confirmation, they stopped you out. Or I am the trader whereby immediately the market broke out of the zone, I put a buy. I bought. Let me write it nicely. So immediately the market broke out of that zone, I put a buy order. Then the market went to the opposite direction, and I got stopped out. I lost money. This is why confirmation is so important, guys. This is why confirmation is so important. There is a lot of manipulation in the markets, so it prevents you from taking unnecessary losses. Note how I said unnecessary. There will always be losses in the market, guys. Even the forex influencers, the professionals, they don't show you their losses. They do take losses. They only show you the good side of things. where they are always making profit. They do this so they can sell you their courses, so they can sell you their signals. So there is a lot of forex, there's a lot of manipulation in the market. It prevents you from losing money, prevents you from taking unnecessary losses. This is why it is so important, right? The confirmation is waiting for a sign that tells you that you can enter your trading setup. This is important, guys. If you understand this, you will know when to trade. Let me edit here. Or rather, let me say, you'll know if your setup is valid. Which takes me back to bullet point number 2. If you know when your setup is valid, it prevents you from taking unnecessary losses. Now, how do you actually look for confirmation? How to identify confirmation? We use a trading pattern called double top and double bottom. We use a trading pattern called double top and double bottom. If you're confused, guys, I'm gonna dive into the charts and I'll show you how everything looks, how everything falls in place. We use a tool called double top, and double bottom. Now let me draw it for you and let me show you how it's supposed to look. How it's supposed to look on the forex table textbooks. How it's supposed to look on the forex books. This is just what you need to have in mind. This helps you identify it in the markets, but it will not look exactly like this. What you must understand, guys, there's a lot of noise in the forex market. There's a lot of noise. So if I show you something like a double top and double bottom, you must not expect it to look exactly like that. Not at all. So let's start with a double top. So a double top, you must think of a Y. Think of for a double top, think of the letter M. Think of a letter M. So this is what it's supposed to look like. So for a double top, guys, keep in mind a letter M. You have your impulse move, retracement, impulse move, retracement, impulse move, retracement, impulse move, retracement. You have your retracement, impulse move. So this is a double top, guys. So a double top indicates a trend reversal. When I mentioned in lesson 1 your trends, we know that we have a bullish trend and a bearish trend. So this is your bullish trend. We were in a bullish trend before. This is your bullish trend. We were going up, and then we had a bearish trend. So we made a reversal. So this double top, it indicates to you when we are going to make a bearish reversal. It's going to indicate to you when we are starting to sell, when more and more sellers are coming in the markets. So let me go ahead and write it down for you. Double top, double top, double top. Indicates to you indicates a bearish reversal. Again, guys, if you're confused, watch lesson 1. I explain all these things. Indicates a bearish reversal. And then let's move on to a double bottom. Some of you might have guessed it indicates a bullish reversal. It indicates a bullish reversal. So let's go into the drawing board so I can show you how it looks like. Get a new page for you guys. Okay. So guys, this is how double bottom works. You have your bearish trend right there, bearish trend, retracement, impulse move. Well, let me throw it better, guys, because I really want you guys to grasp this. If your impulse move, retracement, 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 impulse move. Yeah. So guys, when it comes to a double bottom, we must think of the letter Y, because this is what it displays, a letter Y. You can see the Y forming right here. So when it comes to a double bottom, we must think of the letter Y. Now, with a double bottom, guys, it indicates a bullish reversal. As you saw, we were going down, going down. Here is your bearish trend, and then we identified a double bottom, and then it made a bullish reversal. We started going up. So this is it, guys. This is it. Let's go on to the MetaTrader platform so I can show you how this looks. So a double bottom indicates a bullish reversal. Let's go into the charts, guys. Let's go into the charts. If you're still confused on how to use the trading platform MetaTrader 4 and MetaTrader 5, I made a video on that. You can check it out. So now let's start with our market structure. Again, guys, if you're confused on market structure, go back to the previous lessons. So I've just identified my current market structure. So all I'm doing here, guys, I'm just identifying my market structure. Let me show you an example that already happened. So we had a break and then we had a retest, and now we are expecting the market to break all the way up to this zone right here, this one. So I touched on this in lesson 1. We're expecting a break, a retest, and a break again. So let's say we are currently here, the market is currently here. So since we're expecting some selling momentum right here in this zone, we are expecting a double top. So we will move lower to the lower time frame, and then our trend line helps us. We connect the recent two points. So as you can see, we have a point here, and we draw the trend line at the close, and we have another point here. So what I'm going to do, guys, I'm going to take my trend line, put it on the 2 last recent points, and then I just wait to see if my double top will come out. And then I've waited, and then I already see it. There we go. There's a double top. Exactly what I was telling you guys. This is not the M we saw on the drawing board, but this is the reality, guys. Just look for, let me draw it down for you. When it comes to a double top, literally you can just look for 2 zones. Not zones, you can look for 2 points. For example, you can just look for these 2 points, because the market is not going to move like this, as I said. No, it's going to have a lot of noise. So you as a trader is to just somehow identify these 2 points, and then you will be fine. These 2 points. Now here's our 2 points here. Here's our 2 points. I love this example because it shows you a double top and a double bottom. Here's our 2 points, and let's see how the market performed. And the market is expected to go down. So right here, identify your last two recent points and draw at the close, and then wait for it. Once it breaks, like here, wait for it to form. Don't make the mistake of using this as a point. Don't make a mistake of using this as a point. No, guys, you must wait for it to break the trend and then start looking for points. So I waited it to break, and then we had our break right here, and then it formed the first point. And you must understand, guys, at this point we are not taking any entries whatsoever. We are just waiting. So it formed the first point, and then it returned to the first point. And here at this exact moment, I will look for sells. I will start taking sells. So let's see how the market performed. And there we go, guys. There we go. It hit your TP. Because remember, guys, on the higher time frame, we expected a break and a retest, just like in the previous lessons. We had a break and a retest. Then we expect another break and a retest. So guys, the market was right here. Then we looked for sells. We put the TP here, and it hit the TP. Now let's move on to a double bottom. We covered the double top. Now let's move on to the double bottom. Go lower. I think guys, when it comes to changing time frames, watch my time frame correspondence video. It will help you so much. So now we are at this zone. So we are expecting bullish movement in this zone. We're expecting it to buy in this zone. So we will be looking for a double bottom. We'll be looking for a double bottom, guys, because we are at a zone where we are expecting the market to buy. Expecting the market to buy. So we had a break. We made a retest. Now the market is here. We are looking for a double bottom. We go lower. You go lower until the market is clear, guys. Until you can draw your points easily. Now this example has not yet played out, but the chances of it playing out are more than the chances of it not playing out. You must remember, guys, Forex is a probability industry. It's a probability business. So if the odds are in your favor, you will make more profits than losses. I won't say you won't completely make losses, but your profits will be more than your losses. So right here we've identified my two recent points. Yeah, right there. I've identified my two recent points. Here, and here. We have our first zone already. We have our first zone right there. As you can see, it broke the trend line. First zone right there. The market went up. We're expecting it to come back down and continue going up. It just hasn't played out yet, but we know that the odds are in our favor. So at this point, where the market returned back to the zone, I will start looking for buyers. That's it, guys. It's really that simple. Here is the information. As a wise man once said, do the hard work, especially when you don't feel like it.